Good morning and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth, and I am delighted today to be joined by Tom Hibbert from our Chief Investment Office.
Good to see you, Jane.
Morning.
Pleasure
Welcome.
to be back. Yeah.
So as you know, each week our podcast tries to cut through all the noise and demystify what's going on in the markets and hopefully help you feel more informed, confident, and in control of your financial future. So this week, busy week.
Absolutely.
Busy week. Lots going on that we want to talk about and something different to talk about, actually. So markets found fresh momentum at the end of last week with one event standing out in particular, and that was SpaceX's blockbuster of a debut. It wasn't just a big IPO or initial public offering. It was a massive one, but it was also a real test of how much risk appetite there is out there for the public markets. Plus, add into that hopes of the Middle East de-escalating and a rate rise from the ECB in Europe.
That's right.
So all of a sudden, the market mood looks very different. So let's dive on in, grab your coffee, and let's see what's going on. You can hopefully explain all that to us. So let's start with the obvious one. Why does this massive SpaceX IPO matter so much for the wider market? What's going on there?
Yeah, I mean, it's the largest IPO in history. So obviously that matters.
Yeah.
I would say we're meant to approach this podcast is on a macro level.
Yeah.
We talk about the big things that are affecting
we
global
do.
financial markets. I'm not really supposed to talk about individual companies.
No, okay.
But some weeks, an individual company, the micro becomes the macro.
Yes.
And last week, that was definitely the case. I mean, the largest IPO in history, SpaceX is a massive company. There's a huge amount of focus on tech and right at the frontier of technology and innovation.
Yep.
And SpaceX captures a lot of that.
Okay.
So it's obviously a macro event at a vast level. It's hugely important for equity markets. So SpaceX listed in the US, raising $75 billion.
Wow.
A valuation of $1.8 trillion.
That's huge, isn't it? That's bigger than most countries.
Yeah, and Elon Musk is now a trillionaire. So he's the
of course
first trillionaire. And yeah, it went off without a hitch. But what's
it's amazing, isn't it?
It is amazing, and what's important for us, is because we have to look at we don't want to give a recommendation on SpaceX as a company. We want to talk about what are the macro implications,
what it means,
it means, and it was
so this is just basically much bigger than one company, one stock.
Yeah, exactly. And the whole market shifted in terms of risk appetite. June so far has been quite weak. We had a monster rally in April and May. June, a bit of weakness for the month, and then around the sort of SpaceX IPO, quite a lot of a reversal in risk appetite. We saw equities start to perform very well.
What sort of people are investing in SpaceX then?
There's a lot of retail participation, which we didn't really see in previous tech cycles like this. You didn't see that in the late 90s to the same extent. But it's not just retail investors as well. We've got SpaceX entering into indices over the next few weeks and months. So we'll see some institutional buying and passive buying of SpaceX via that. We've seen even some sovereign wealth funds get involved in the early days. So Gulf Sovereign Wealth Fund has been buying. So it's quite broad.
Yeah.
But I would highlight in particular broad participation, but I'd highlight retail participation as well.
So does this mark sort of a genuine reopening of public equity markets for big growth businesses?
Yeah, it's a good point to raise, because in this cycle we've seen a lot of big companies, big tech companies, big AI companies that have grown a lot and providing that sort of new frontier technology. They've stayed private for longer.
Right.
And now we're starting to see some of them come to market.
Okay.
And SpaceX is an example of that. All of the big ones in the pipeline are an example of that.
So why have they stayed private for longer then? So you mentioned Anthropic, and they're all private at the moment.
Yeah, so the market has shifted more. There's been a growth in private capital.
Yeah.
There are some reasons why companies might want to do that.
Okay.
They don't necessarily need to go to public markets
to raise more money.
To raise money as early as they have done historically. But now that there is this, what we've seen and what we see in the pipeline is actually we are seeing more companies but becoming public and listing, and that gives you sort of an additional layer of price discovery. And it gives you a better insight into those companies and their valuations.
Interesting. Because the SpaceX one has gone so well, that's probably setting an encouraging tone for future.
Yeah, early days, but yes, so far it's going well. It's being well digested by the market, and there's still a lot of excitement around tech.
Okie dokie, thank you. Let's talk about the US-Iran deal and potentially the hopeful reopening of the Strait of Hormuz. So how important was that for markets last week?
So it was only rumoured last week. And I say rumoured, I mean, President Trump came out and said that a deal was going to be agreed by Sunday. And
what did you say that was for the 39th time?
Yeah, that was exactly. So 39th time, lucky. But this time, the market was optimistic about it. And we did see quite a big reaction there. So oil down 6% last week. Brent, which is the sort of global oil price, seaborne oil price, trading at $84 a barrel, down from sort of mid-90s the week before. So quite a big fall in oil prices, a strong performance in equity rally, a strong bond rally as well. So we saw yields falling, gilts performing very well. So a big turnaround, optimism around this potential peace deal. And it does look like it's the real deal this time around. So we should see, as long as the agreement is signed. And theoretically, there are still things being ironed out, but we should start seeing trade flowing through, the blockades lifted, and not a complete normalization, but the start of a normalization of global trade.
Okay. And then the other area that happened last week was back into Europe. The ECB raised rates in what we think is quite a weak growth backdrop.
Undeniably weak.
Undeniably weak. There we go.
I think a lot of the economic data in Europe is surprising to the downside. Growth is sluggish. And inflation is a little bit sticky, but the ECB is really reacting to this energy shock. It's a bit odd, really, that they've hiked, because just as this agreement, or just before this peace agreement has been signed, we're seeing the ECB hiking rates, and it seems like they're tightening into weakness.
Tightening into weakness.
Exactly, raising interest rates into a slowing and weakening economic backdrop. So I think the ECB needs to be cautious about their interest rate trajectory from here. The market still thinks the ECB has one more hike in them. But I think our view is that would probably be a mistake. We aren't really seeing the secondary effects of inflation becoming embedded in the European economy
because of the weakness.
Because of that weakness, there's less of a transmission effect, and we've spoken about this on the podcast before. But I just think the ECB does need to be a little bit careful about hiking from here, and I think one hike should do the trick, particularly if this peace deal does prove sustainable.
Great, thank you. I think it's probably time for me to sum up what's in my Canaccord takeaway coffee cup today. So this was a week when markets showed what they still want to believe in, I think. Belief in transformational growth via SpaceX. Belief in de-escalation via Iran-Hormuz. And belief that central banks can still contain inflation without killing growth. Hopefully, anyway, for the
and
European
the focus
state
is really back on that at the moment. This week, we've got the Bank of England. We've had the Bank of Japan already. The Bank of Japan have hiked. We'll talk about that next week. Very, very interesting there. And we've got the Fed. Kevin Walsh's first test as Fed chair. So exciting things to talk about.
I know you love it.
I'm over the moon.
But we also would say, please don't chase all the excitement of one stock, but rather it's about disciplined participation. There you go.
Absolutely.
And I did like your phrase. We like to talk about it when the micro becomes the macro. That's quite unusual for us here on the podcast. So like it. Good. So thank you again. And thanks for listening to the Canaccord Coffee Break podcast. Hope you've enjoyed it. And don't forget to hit follow on your preferred podcast channel of choice, and you will never miss an episode. And as always, we'd love to hear your thoughts. Ask us any questions. Let us know what else you'd like to hear about. Drop us an email, coffeebreak@canaccord.com. Thank you.
Thank you for listening, everyone.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.